This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on December 20th, 2013, just prior to Christmas. We will be doing shows throughout this month, obviously into the new year as well. Our time is 8:39 Mountain. Radio show runs on your favorite radio stations, also archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in World Financial Report on radio. You'll find the podcast. It can go on any portable device. You can listen to us anywhere. Harold does daily market commentary as well. That market commentary found on his websites and as well on the podcast site. It was an interesting week. The Fed did decide to taper $10 billion. It was interesting to note that Rick Santelli, who is on CNBC, said it's not a taper, it's a ta. It's a ta because they really did not do very much. In fact, when you boil it down, the reduction in purchases is very small. The Fed has said in the past that it would not consider raising rates until the employment rate fell to 6.5%, but the language is indicating that they'll wait until unemployment falls significantly below that before they consider raising rates. The Fed will not raise rates as long as inflation is super low, which it currently is. Also, there is no target date to end QE, even though the taper has begun. Quite a few people thought that there would be no taper. There were people expecting a taper. And then there are those that think that every meeting now for the next year, they will taper and peel it back to nothing. No quantitative easing by the end of 2014, which I find very hard to believe. $4 trillion balance, that's how much the Fed in the United States, $4 trillion account, Federal Reserve assets, $4 trillion on the balance sheet. 1/3 of the bonds that are out there belong to the Fed. It's interesting to note that in the United States, they did come up with a budget deal for 2 years, but the debt ceiling is up in February, and the Republicans have said we will fight the Democrats on that issue. Harold, one of the stories that caught my attention this week I thought was interesting is the IMF, the Christine Lagarde, who heads the IMF, came out and said that it's premature to declare the Eurozone crisis is over. And she is pouring cold water over claims that the Eurozone safety is basically safely recovering, calling on European central banks to take preemptive action to alleviate the credit crunch for small business and head off the risk of deflation. And she said it's premature to declare victory, warning EU governments may have to ditch austerity policies and switch to fiscal stimulus, similar to QE, printing money, buying bonds, to kickstart growth and avert lasting damage to the underlying economy. Now, she goes on to say in the story, and you can get it in our free weekly newsletter from Harold, and you can connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, or Worldwide Precious Metals, wwpmc.com, 1-866-623-2002. And in this story, she goes on to mention Greece and high unemployment among not only adults, but youth as well. And that is a major concern all over Europe. People, as we've said before, Harold, and we had a chart in our newsletter last week, are actually confusing the stock market going up because of QE with the real everyday economy. And you told us an interesting story before we got on the air here about going to dinner and seeing a lot of the restaurants that you went to basically empty or half full.
Very true, Randy. Again, 2 weeks ago we had a chart in the newsletter that showed the S&P 500 at record levels, and we showed the GDP, which is the gross domestic product, the growth of the United States, basically at zero. I mean, you look at the chart, you understand why the S&P is at record highs, but again, it just doesn't match up. Why in the world would a stock market rally if there's no growth in the country? The country is so deeply in debt, trillions and trillions of dollars. Most people don't trust the government here in the United States in any way, shape, or form. The only people that are making money here in the United States are the insiders that are in the stock market, because most of the general public, meaning the middle class, is not even in the market anymore. They got wiped out in 2008. So, these are the most confusing, maddening, infuriating times for those that look at the world markets and look at the situation that we're presently sitting in and scratch our heads and say, if it wasn't for these particular times where the government is so desperate, there's no way in the world that this is possible to happen. It's literally impossible. I read a report this week, it's in the newsletter, that talks about the fact that, and we've talked about it on the radio show many times, how this is really an impossibility if the markets weren't being played with, was the fact that you take a metal like silver or gold, very important commodities, silver especially. Silver is not only a monetary commodity, it's used in everyday life. We use it all the time. On top of that, the United States and Canada both have a very successful silver minting coin program that basically has shown for the last few years that there's a massive shortage of silver. In fact, the United States had to stop minting silver coins because they didn't have enough silver to make this happen. So how in the world, if there's a physical shortage of a commodity as important as silver, how is it possible that the price goes down? That has never happened before. Just think about it. If there was a massive shortage of oil, but the demand for oil worldwide was still as strong as it's ever been, the price of oil would be sitting at $200 or $300, $200 or $300 at this point. But obviously, that's not happening with gold and silver. There is definitely a shortage. In fact, if you look at the premiums of physical gold and silver, it's probably amongst the highest it's ever been, meaning that the spread between the bid and the ask is so high, and that only reflects a shortage in the market. So again, how in the world could we have a physical shortage of a commodity that's as important as silver is and have the price decline as much as it did? On Thursday, the market was disgusting. I mean, first of all, on Wednesday, when the news came out that they were going to taper, and we all knew that taper meant absolutely nothing. It should have had no effect whatsoever on the market, and the stock market went up 300 points. I mean, we're all sitting here scratching our head and saying, this is the biggest joke that I've ever seen. There's no way in the world that market should have responded like that. And then the very next day, Thursday, the market did absolutely zero. If it was that bullish for the market would have rallied and rallied several days in a row. But again, that didn't happen. So the bottom line is that aside from the insiders on Wall Street, there's very few people that actually believe that the United States economy or the European economy is actually getting better. I don't see how in the world anybody could think that the European economy is getting better when you have such high unemployment, when you have 60% unemployment amongst college kids and 30 to 35% unemployment amongst adults. So there's no taxes being paid, not enough taxes to get the country back on track. That's the same situation here in the United States. We know that the unemployment numbers here in the United States are bogus. Everybody knows it. There's two different sets of numbers. There's the numbers that the government wants us to hear, that unemployment is back down to 7%, but the real numbers are 15 or 16%, and they never talk about that because they don't talk about the people that have given up looking for a job. So we don't get the right information. We don't get the information that we need to make the right decision. On top of that, yesterday gold dropped over 3%. It was one of the worst drops for gold and silver that we've seen in many, many years. Today the market's back up $16. Yesterday gold dropped 30. Today it's back up 16. We talked about the heaviest support level for gold at 1180, and that's basically where we hit yesterday. So there's very heavy support in the gold market at 1180. What happens if gold breaks 1180? Well, in the futures market, the market will fall. It could come down from 1180. It could go down, to just above $1,000, and we would still be bullish on this market. I don't want to sound like an idiot or foolish or somebody who doesn't know what they're talking about. I've analyzed these markets for over 35 years. When we were in the right markets, when we were in the markets for the last 12 years, when gold went from $250 up to $1,900, we were right because we know how to read charts. We know how to read charts. I've done it for half of my life, and the markets always tell you what to do. It's only when these type of scenarios happen, the desperation of the U.S. government especially, that has caused the markets to do things that are not natural. And that's why it's so difficult to analyze the markets at this point, because they're not responding to the technical and fundamental aspects that they've always responded to. And the reason for that is the desperation of the Federal Reserve and the U.S. government. So basically, here's what we need to concentrate on. We need to keep a clear head and understand not only why things are happening the way that they are, but who's in the market, and is this market capable of turning and coming back and not only, getting in a bullish stance again, but coming back and making new highs. In fact, I probably read 100 articles a day of what's happening in the world economy. And the fact is that there's some very brilliant people out there that believe it's only a matter of time until the U.S. economy absolutely crumbles. They talk about the U.S. dollar being one of the weakest currencies in the world at this particular point. But let's concentrate on something that makes sense at this particular point, something that we could somehow grasp onto, which will tell us which way these markets are going to go. And to me, one of the major factors is China. Now, China is a communist country, and we don't get all the information that we need out of China to determine how good or bad their economy is. We have seen the ghost cities of China, where they've built massive brand new cities that nobody lives in. But the fact is that China still seems to be doing okay, a lot better than the United States is doing. And don't forget, a lot of the money that the United States borrowed is from China. The thing that I concentrate on when I look at China is that they're doing the exact opposite of what the United States is doing. They're buying all the gold that they can get their hands on. So why in the world does one country like the United States look at gold like a pariah that they want nothing in the world to do with? And then on the other hand, you have a massive economy like China that wants all the gold that they can get their hands on. And the reason for that is, and the true reason I believe that that's happening, is that China is going to back their currency with gold, just like everybody else should be doing at this particular point. But they're not. But China is buying gold no matter what the prices are. They were buying gold when it was at 1,900, and they're buying gold now that it's at 1,100. So the fact is that China is buying as much gold as they can, and the reason for that is number one, they believe that there's inflation coming, and number two, they intend on backing their currency with gold. And if that doesn't tell you where the future of this market is, nothing will. We've had a bad 2 years in the market, but we don't trade this market. We own gold physically. We own silver physically. We don't leverage it. We don't buy it in the futures market. We buy and hold it as a hedge against the onslaught of what's going to be coming in the foreseeable near future. And what I see happening between Russia, China, and India, which seems to be totally the opposite of what's happening here in North America, it tells me that the gold market is nowhere near its highs and has the capabilities of making highs that we've never seen possible before. And it's only because of the suppression of the price of gold and the fact that China is buying as much gold as they can possibly get their hands on, which is one of the fundamental reasons that I believe that we're still in the right market at the right time, and this gold and silver market is not only going to rally, it's going to come back and break brand new highs. It's just not going to rally in the way that we saw for 12 years, where the moves were systematic, where we could basically calculate what the next move was for gold. When all of a sudden the rules change and the people that are in the market have a different agenda, then we just have to deal with it. You can't fight the government, and we can't make the markets go up on our own. But the fundamentals are still there for gold to go higher, even if gold goes down to $1,050, which it could definitely hit. 1180 gets broken, we could see 1125, and then we could see 1,080 in gold and still be bullish on this market. So again, let's look to China at this particular point, and Russia and India as countries that seem to have a better grasp of what the world economy is doing and what they're doing about it. There's no way in the world that China is buying gold to lose money. That's something that we've got to keep in our head. The fact is that they've even allowed their citizens to buy gold as investments, which never ever happened before. There's one other thing out there, and the reason that interest rates are staying so low is for one very apparent reason that they never ever talk about, and it's the derivatives market. And we've talked about the derivatives market every single show for the last umpteen shows, because the derivatives market, in my opinion and many others, is going to be the destruction of the U.S. stock market. And as soon as interest rates start to go back up, which they eventually have to do, it will hurt this derivatives market so severely that we will see things happen in the market that you just won't believe. So whether you're buying gold as a speculative investment to make money, or whether you're like the rest of us that are buying gold and silver as a hedge against the onslaught of what's coming up in the foreseeable near future, again, everybody has their own reasons for doing what they do. I'm a firm believer in protection. I'm a firm believer in insurance. I buy insurance because I don't want to lose everything that I've worked for. And there are certain things that you can do to protect yourself. If you have all your money sitting in paper assets at this point, you are susceptible to a very weak dollar and to market moves that make absolutely no sense to you at this point. Diversification is extremely important, and the hard asset market is still the place to have your money. There are brilliant, and I mean brilliant, people out there that are so upset about the way that the Federal Reserve and the U.S. government is controlling these markets. Why in the world would the Dow Jones go up 300 points on Wednesday with such pathetic news that really didn't mean anything? Because it's all about the stock market at this point. But we also know that the smart money is coming out of the market. The numbers certainly show it. And who's going to get stuck again is the general public that always buys at the wrong time, buys at the highs, and gets crushed in the market when all the fundamentals make the market fall. So again, Randy, at this particular point, I don't even have a problem if gold goes back down to 1,060 where the heavy support is. But again, it did hold the 1180 level so far. We're up 1640 today. Silver's up 21 cents, back up to the 1960 level. Platinum's up $14 at 1339. The palladium market's back up over 700. And again, the stock market just doesn't make any sense. And, where I do watch it, again, it's something that I scratch my head and say, why in the world would anybody want to trade in a market that is manipulated like that when we're supposed to be trading in free markets? So, Randy, that's the way I see things right now. I'm still holding my gold and silver, and I'm not selling it because, again, I'm not trading the market. I bought it for a specific reason, and I believe that that reason is intact and is going to prove to be one of the smartest moves that we've ever made.
The Fed taper was only $10 billion. They're still going to be doing $75 billion a month. Printing money, buying bonds, $4 trillion balance sheet. They have a debt ceiling fight to come. The economy is starting to roll over in the United States. The signs are there. Still major trouble in Europe. People are kidding themselves if they think that the stock market going up is the real economy. Connect with Worldwide Precious Metals. That is the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. Let them educate you. Let them earn your business and educate you as to why you should have an allocation of precious metals at all times in your portfolio. Let them give you an overview of their thesis as to why you need hard assets. Get your name on the list for our free weekly newsletter. And Harold said our newsletter is being read like never before because we're in a situation where people just don't understand what is going on. Get your name on the list. We'll send it out via email free of charge to you every week. You can go through it in 5 minutes or spend hours. It's up to you. Educate yourself. I was at a Christmas party last night, and a woman said to me that financial literacy is so important. They should teach it in schools. And I said, I agree with you 100%. And I think that is the case for all of us. We always need to be learning and keeping up to date on what's happening in the world financially and geopolitically. We work so hard for our money. We don't want it to go away when we invest it in markets that obviously we don't have the knowledge we should in. That's one of the keys. Worldwide wants you to have the knowledge. They want you to be educated as to why you should be in gold, silver, platinum, palladium. Connect with them, 1-866-623-2002, the website wwpmc.com. From the Canadian Business Channel, it was interesting many years ago when Harold and I first started doing the show together. Harold started doing it after 9/11. I joined him in February of 2002. And I think it was in 2002 or 3, Walter Murphy was on television and said that he felt gold was going to go short term to $850. And it's interesting, he is out today with the comment, and this is from the Canadian Business Channel, a technical comment on gold from Walter Murphy, a retired Merrill Lynch analyst and runs his own technical advisory. Gold had its worst day since June with a decline of 3.9% to 1187. This carried gold to levels not seen since July 2010 and confirmed our count. In our most recent STR, we noted that the Elliott Wave Fibonacci relationships allowed for at least 1189 and possibly 1126, 1061. Today's decline achieved minimum objectives, but with both the weekly and monthly Copic curves under pressure, the potential for lower lows, perhaps 1126, 1061, has to be respected. Moreover, despite the recent weakness, sentiment is still only neutral. That said, there are bullish momentum divergences, and we do regard this weakness as part of a C wave. As a result, we will be increasingly alert for a bottoming formation that should lead to the best rally since at least October 2012 in the peak. In plain English, we're getting there, but not there quite yet. And that is from Walter Murphy, who is quite an expert on these precious metals markets, calling back in the early 2000s for 850, and he was bang on. One of the things that was interesting, a lot of money is coming out of ETFs. And what we're finding, in fact, Bloomberg did a story on it, the depletion of London gold warehouses by shipments to Swiss refineries where the metal is recast for export to Asia was discussed, and they had it on Bloomberg. We have that story. What's happening to all the gold? What's happening is the ETFs in North America and over in Europe are being drained. That gold is being taken over to Asia. To give you an idea, and this is another story from the Canadian Business Channel, currently there's about 815 tons in the GLD. China has purchased 600 tons, just over they're saying purchase 600 tons of demand. So they're saying that China alone could drain the GLD in no time flat. That's one of the things that we are seeing, and you can read about it in our newsletter. In fact, we have a chart from John Hathaway, the 5 most remarkable gold charts as we head into 2014. The strong net exports to China from Hong Kong and other countries for gold. The gold is rolling into Asia, and where people obviously in North America are getting into paper assets, China getting into hard assets. Follow the smart money and learn more. Educate yourself. Connect with Worldwide Precious Metals. Their telephone number, 1-866-623-2002, and get our free weekly newsletter. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on December 20th, 2013. We'll have another show for you next week, and then obviously we'll be into the new year, 2014. One of the big stories this week was the Fed tapering $10 billion of quantitative easing. They're still going to be doing $75 billion a month. And what does that mean for precious metals? Let Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, explain it to you. Interest rates, as I explained earlier in the show, going to stay low for a long time. They haven't said when QE would ever end. These are all gold positive, silver positive, hard asset positive things. In the short term, though, we're seeing some hard asset pain. But obviously, when it comes to investing, you want to be a contrarian. You want to be buying when everyone is selling and obviously selling when everyone is buying. Have hard assets in your portfolio. You should have them 5, 10%, if not more, at all times, good or bad. Let Worldwide educate you as to why you should have gold and silver in your portfolio today. Telephone number 1-866-623-2002. The website, wwpmc.com. Harold's website for diamonds is rarecoloreddiamonds.com. Our featured diamond of the week is a 0.52 carat round, fancy, intense Argyle pink. And this is a stunning, stunning diamond. This week, we had, actually last week, as promised, we had Sotheby's magnificent jewel sale, December the 11th, 2013 in New York City. And we have auction results for you. We also have auction results from Bonham's in New York City. And there were some blue diamonds that sold. And the thing that really stands out, Harold, and we'll talk about that a little later, is how diamonds are going for record prices. People are, the smart money, the big money, moving out of paper assets, moving into hard assets like gold, silver, platinum, palladium, diamonds, art, cars, anything that is tangible and real. And we're really starting to see this among the very, very wealthy. And they're not doing it just to buy trinkets. They're doing it for financial reasons. And at some point, the average everyday person will start to follow along. But now is the time to get involved in these markets before that move really starts to happen in a major way.
You bet, Randy. And again, I'm very, very pleased. The auction results have just been outstanding. And, you know, what it is proving is that it's not only the multi-million-dollar diamonds that are going up and selling at record prices, but really what is standing out, it's the lesser expensive diamonds because, again, not everybody has $20 million to spend on a diamond. Our business is based on the everyday hard-working man and woman that is just, you know, sick and tired of getting 1 or 2% return in the bank and is afraid to go back into the stock market and, you know, concerned about the state of the overall economy. You take, for example, what's happening in the yellow diamond market. That's where most of the records are being set. And you can get involved in yellow flawless diamonds for $20,000. A $20,000 diamond today is an $80,000 diamond in 10 years from now. So basically, when you look at where your money is, how it's working for you, and where you want to be in 10 years from now, are you going to be able to comfortably retire putting your money in the assets that always fall? Stock market may go up for 2 or 3 years, but then it has those massive declines that wipe everybody out. So, you know, this is why you need to be diversified, and you need to have some money sitting in the type of assets that are going to protect you against losing your money in the paper asset market. So the yellow diamond market, a yellow flawless diamond that's fancy yellow, back in 1980 was about $500. Today they're about $20,000. 10 years from now, they'll be worth close to $30,000. If you were to put $20,000 into the stock market today, or $20,000 into a yellow flawless diamond, we know what your position is going to be worth, or what your diamond is going to be worth in 10 years, but you have no idea what your money is going to be worth in 10 years. So, again, just look at what the auction results are. It's the lesser expensive diamonds, and to give you the best indication, a couple weeks ago, there was an auction where there was a fancy orangey pink diamond sold that was estimated to sell for $100,000. Well, $100,000 is a lot of people's, you know, comfort level to buy an asset, you know, as strong as a diamond. Well, instead of selling for $100,000, it sold for $800,000. People were scratching their head, but again, it's a sign of the times. In the same auction, another orangey pink diamond came up, and it was supposed to sell for just over 100,000, and it sold for 500 and some odd thousand. So even the lesser expensive diamonds, there was $15,000 yellow diamonds. They weren't flawless, but they were really nice diamonds that were supposed to sell for 15,000. That sold for 45 and 50,000. That's 300% return higher than what the experts at Christie's and Sotheby's were saying that diamond would sell for. And it's not that they don't know their business, they do. It's the sign of the times. Just like China is buying up all the gold, investors are buying up investment quality diamonds. Because putting your money in the bank at 1 or 2%, and if you've seen any of the reports or you saw Worldwide's seminar on what happened in Cyprus and the state of the American and Canadian banking system, you'll realize that you don't want to keep a lot of money in the bank. You're guaranteed you're guaranteed up to 125,000, but anything over that, if that bank closes down, you lose all your money. So basically, you've got to look at the markets differently than you ever really did before, because the markets are no longer what they used to be. You cannot sit down and predict, through analytic analysis, you can't figure out where these markets are going as easily as we did for the past 12 years. And it's not that we don't know our business. Believe me, we do. It's just, again, what's being happened in the markets out of desperation with the governments here in North America and also in Europe. So, again, the diamond market is on fire. You've got diamonds that are supposed to sell for 15, 20,000. They're selling for 3-4 times that amount. You have diamonds that are supposed to sell for 100,000 that are selling to 5 to 8 times that amount. If you want to get in on that type of situation, give us a call. Those are the type of diamonds we carry. Where we do carry diamonds starting at 15 to 20,000 and going up into the 10, 20, 30, 40 million dollar range. About a month ago, there was a 113 carat flawless diamond that sold for $30 million. We have 2 of those, over 100 carats, that are perfect diamonds. So again, we have those type of diamonds that the very, very wealthy buy, but that's not my major business. My major business are the people that listen to our radio show, the people that go out and there and work every single day and just want a fair shot, something that they can put their money in that is safe, that they're not going to lose it, and they have a chance of making money. Now, the diamond market is not a short-term investment. You don't buy a diamond today and sell it a year from now. You're never going to make any money from that. You're wasting your time if that's what you're planning on doing. Even though a diamond may go up by 15 or 20% a year, it doesn't make sense to buy a diamond today and sell it in a year or two. The minimum you want to hold on to it is for 5 years. The longer you hold on to it, the more and more they go up. There are cases of diamonds, and I'll give you my own personal experience, that in 2003, I bought a 2-carat vivid purplish pink argyle diamond for $350,000. Today, that diamond is over $3.5 to $4 million. And that happened over the last 10 years. So if you're in your 40s, 50s, and 60s, have not put away money for retirement, this is the area that you want to look at because they're safe. They're very, very rare. They never, ever fall in price. And we created the secondary market to resell them. So you now have a way of reselling your diamonds. And that's where we really get involved. Not only do we show you the most beautiful investment diamonds, again, starting in the 15 to 20,000 range and going up from there, but we're the only company that can resell them for you. So again, we own 8 Seagull Fine Auctions, which we built for our clients to resell their diamonds. My wife's girlfriend has a diamond that she got 50 years ago from her grandmother, and her grandmother paid $50,000 for this pink diamond that's now worth $5 million. There are so many cases of diamonds that have gone up over time that have reached unbelievable record prices. 2 years ago, there was a 2.5 carat vivid yellow VVS1 marquee diamond that was supposed to sell for $180,000 that sold for $950,000. This is what's happening in the diamond market, and you do not have to be filthy rich in which to participate. And again, most of my clients are hardworking Canadians that just want to do the right thing, that they're petrified of the stock market, they're concerned about the state of the U.S. and the Canadian dollars, and they're concerned about what's going to happen moving forward. And again, it's the diamond market that gives you that return that you need of, again, 15, 20, 25%. And in the case of argyle pink diamonds, where Argyle pink diamonds come from the Argyle mine in Western Australia. This diamond mine produces 95% of the pink diamonds in the world, and it's going to close down by 2020, which is 6 years from now only. So basically, if you buy an Argyle pink diamond today and hold on to it for 10 years, you're probably going to see a return of 8 to 10 times what you paid for that diamond. It means if you buy a diamond for $100,000, you could literally sell that diamond for $800,000 to $1 million, or we would sell the diamond for you. We get 10% of the profit, you get all the rest. So the fact is that that's where the smart money is going. The smart money is going into the type of assets that are not controlled by the Federal Reserve and the government. The smart money is going into gold and silver like China is doing, and into diamonds like China is doing and other countries are doing. The fact is that the diamond market is on fire. The last 4 or 5 auctions have all shown record prices on yellow diamonds, on pink diamonds, on red and blue diamonds. And those are the type of diamonds that we carry. So go to our website, rarecoloreddiamonds.com, and look under the loose diamond section. You're going to see the most beautiful diamonds. And again, these are not $40 and $50 million diamonds. These are $20 and $50,000 diamonds that you'll make more money on than you would ever make trading stocks, bonds, or anything like that. So again, I'm very, very pleased with what's been happening. The auction results have been so outstanding, and again, even on diamonds that are in $15,000 and $20,000 range, they've been selling for $40,000 and $50,000, 3 to 4 times what the experts are predicting. So again, Randy, I don't know what more to say about an unbelievable market that's being written up every day in the markets. The results from these auctions are phenomenal, and again, this is our business. This is what we do. We bring you the type of diamonds that you need to make money in these markets. Argyle pinks, yellow flawlesses. We're also the largest dealer of green diamonds in the world, and one of the largest dealers of deep flawless whites, which go up by 15 to 20% every year. There's no other investment that does what diamonds do with the safety that you have in that market. The other thing about the diamond market is that we have the wherewithal to sell your diamonds in different parts of the world. And why would we want to do that? Because of currencies. Right now, the Canadian and American dollars are extremely weak, but they're weak against the euro, and they're weak against the euro, and they're weak against the British pound. And basically, when it comes time to sell your diamond, we want to sell the diamond in the part of the world where the currency market is the best. Right now, if we were to sell a diamond of yours in England and pick up British pounds instead of Canadian dollars, do you realize that you would pick up about 50% more return on your diamond investment just by the currency? And that's what we've planned for the future for our clients, the opportunity to sell our diamonds in various parts of the world where we're going to make not only a profit on the diamond, but a very nice profit on the currency. So the fact is that you want to buy diamonds now and put them away for the future. Nobody's really selling diamonds at this particular point. They're not selling their personal diamonds because diamonds are going up more than almost any other investment is. So what you want to do is buy and hold. You want to hold on to these magnificent pieces. In some cases, many of our clients like to put them into beautiful pieces of jewelry, which is a phenomenal idea, because when you look at the price that these diamonds sell for when they're set in jewelry, they could be astronomical, and that's what's happening at auction right now. So, Randy, again, I couldn't be more pleased with the recommendation on diamonds. They're doing tremendous. Our clients are doing extremely well, but by far, the next 10 years should see the biggest returns for yellow and pink diamonds, and that's what we carry and offer to our clients.
We always knew that rarecoloreddiamonds.com was the worldwide leader in investing in rare diamonds, helping you do that. And the auction site, hsfineauctions.com, was a cutting-edge site that would take the world by storm. And that was confirmed this year when Harold went on Bloomberg Television twice and on Bloomberg Radio. And we have those interviews, the television interviews, and as well the radio interview. Harold brought this market to our attention back in 2005 and started rarecoloreddiamonds.com at that time, and no one really had heard about this market or the potential of it, or even the potential of the Argyle pink diamonds, due to the fact that the Argyle mine would be shutting down in approximately, at that point, 10 years. And here we are, and this market is literally taken off. Herald was the worldwide leader in this market, and now today there are a lot of Johnny-come-latelys, people who have just jumped on the bandwagon, as happens all the time. You have somebody come out and make something or make a prognostication, it be true, and there are a lot of copycats. But remember one thing, there's only one Harold Siegel. There's only one rarecoloreddiamonds.com, as they have been interviewed 3 times by Bloomberg Television in the United States, twice on TV, once on the radio, and no doubt more to come in the years ahead. Harold is the preeminent expert on colored diamonds around the world. And you can connect with him at rarecoloreddiamonds.com. The telephone number to speak with him personally and privately, 1-800-432-1022. As mentioned, Bonhams had a sale, and they sold an extremely rare type 2A stone, and it was a modified pear brilliant cut. It was listed by an unnamed private seller and sold for $2.6 million, more than double its pre-auction estimate. And that was a white diamond. And that's the D flawlesses that Harold has spoken about for quite some time. Also, there is a 1.12 carat pear-shaped natural fancy intense blue diamond ring, tripled its pre-sale estimate to reach $365,000. Well, a fancy brownish pink diamond ring weighing 2.01 carats, more than doubled its estimate to reach $155,000. A fancy intense yellow diamond ring weighing 7.09 carats reached $185,000. While a fancy light yellow diamond ring weighing 7.79 carats achieved $118,750. Now at Sotheby's, to give you an idea, the magnificent jewel sale, they had some outstanding results as well, featuring these are the diamonds that Harold really brought to our attention, more so than any other beyond the pink, and that is yellow diamonds. There was a yellow diamond that sold, and it was a 14 carat. In fact, there were 2 of them. It was a magnificent pair of platinum 18 karat gold fancy vivid yellow diamond and diamond pendants from Molina, and the estimate on it $1 million. It went for 1.45. Also, that was lot 415, lot 218, an impressive fancy yellow diamond, and it was weighing 40.62 carats. The estimate on it, $800,000, went for $1,085,000. Lot 225, a very fancy vivid yellow diamond and diamond ring, and the carat weight was 16.38 carats. The estimate on it, $750,000. It sold for $875,000. And Harold, we have many more auction results from Sotheby's, Christie's, Bonhams. We can send out to people. The yellow diamonds, as we are seeing from Sotheby's last week, were real winners, and people can go through the auction results and see for themselves that yellow diamonds, pink diamonds, the rare blues, this whole market is taking off because you're starting to see people realize governments are going to print money until who knows how long. That's why the smart money is moving into tangible assets that cannot be printed. And that was one of the things that Rick Rule from Sprott USA said this year, in 2013, invest in things they can't print. Invest in things they can't print. And that is so crucial. And they can't print diamonds. They can't print gold. That's why we're in hard assets today, Harold.
You're 100% right, Randy, and very comfortable being there. Again, you're talking about the gold market. The physical gold market, in my opinion, is totally different than the paper gold market. Even though, the price of gold is determined by trading on the futures market, the supply and demand situation in the physical gold market is totally out of kilter, and that will eventually lead to much higher prices. We just have to be able to bide our time. That's why I'm saying to own it physically. Same thing with diamonds. Nobody can take it away from you. Nobody knows that you own it. The government can't confiscate it, and it's not something that trades on an exchange, so you don't get those, tremendous price swings, that are so uncomfortable in stocks and commodities from time to time. So the diamond market, again, is a market that has been around forever. when you look at these diamonds in person, you understand as soon as you see them what you have. It's like nothing you could possibly imagine. When you look at an Argyle pink diamond, especially our featured diamond this week is so magnificent that when you look at the actual video that we have of this particular diamond, you're going to understand exactly what this diamond is all about, because it's round, it's intense, it's over a half a carat, it is cut so beautifully, and this is a diamond that again, you will not see on anybody else's website because it is so rare. 95% of the Argyle pinks are under a quarter carat, and they're considered the most valuable pieces in the world. Again, the most concentrated form of wealth when you have something so small that could fit in the palm of your hand, and it's worth that type of money. The 52 round brilliant fancy intense pink Argyle, when you look at that video, your jaw will drop. It is so stunning, and it is obvious once you see it why those diamonds are so valuable, and in 10 years from now why those diamonds will be 10 times what they are today. One of the greatest investments you'll ever make. Go to our website and look at these diamonds. Look at the featured diamond this week. You're going to see one of the most magnificent diamonds you've ever laid your eyes on. I'm in love with this diamond, Randy. It is stunning.
RareColoredDiamonds.com is the website. Connect personally and privately with Harold at 1-800-432-1022. Yes, Harold will speak with you about your financial situation and educate you about diamonds. RareColoredDiamonds.com, 1-800-432-1022, and speak to him about our featured diamond, a 0.52 carat round, fancy, intense Argyle pink. We have about 4 minutes left in our show. One thing I did want to get to, and this is in relation to gold and silver. One of the things that happened this week, it was very, very important and could have huge ramifications for the gold and silver market. The Volcker rule could hamstring big banks with their gold and silver trades. The implementation of the Volcker rule over the next 2 years will, in theory, prevent big banks dealing in gold and silver for their own speculative purposes, their own accounts. Much has been made, particularly by the gold and silver bulls of high-frequency trading, by the mega banks like J.P. Morgan and Goldman Sachs, as the possible or probable reason for some of the big takedowns in the respective metal prices, which seem to have been occurring, increasingly frequently over the past 2 years. Trading patterns have been illogical, with huge sell orders of paper metal into the future markets, usually at a time of day when markets are thin, thus driving prices down enormously and prompting even more stop-loss sales for algorithm computer trading programs. It's also felt that no trader would sell in this manner, as it's hugely reducing any trading profits that might be made on the downs, although it can lead to substantial profits being taken on any subsequent recovery. Thus, the blame for these strange, enormous paper sales that dwarf physical trade is very much felt to lie at the door of massive trades by the big banks. J.P. Morgan, Goldman Sachs are often quoted as the principal culprits, particularly as the trades often seem to follow very adverse comments on the likely movement of the gold and silver prices by these banks and their commodity analysts, which with the apparent takedowns taking place a couple of days later. And they're thinking that this will change as a result of the Volcker rule. And they go on to say in the story, it's highly unlikely that the mega trades are made on behalf of normal clients, unless, of course, the clients are Western central banks, which may have an agenda to keep the gold price down and thus give effective support for fiat currencies, the value of which tend to be rated against the gold price. But now there's U.S. legislation due over the next couple of years that would hamstring the banks from making these mega trades on their own accounts. And as Jeff Nichols put it, this provision has become known as the Volcker rule after Paul Volcker, and bans the largest U.S. banks from engaging in speculative trading, and has now been approved by the U.S. financial regulatory agencies. And Nichols reckons important implications for gold and silver are going to happen as a result of the Volcker rule. And Harold, we have about 30 seconds left. I wanted to get that in because it's so crucial for the gold and silver market going forward. But 30 seconds left, and we should wish everyone a Merry Christmas. And obviously we'll talk to people prior to the New Year. Happy holidays. Thank everyone for listening to our radio show.
You bet, Randy. I do want to wish everybody the happiest of holidays. And again, we will be on next Friday, but obviously it's next Wednesday that is Christmas. So we do wish everybody a very happy holidays, a very happy New Year, and we will be here with you every week and just wish you all the best. Wish you a nice weekend and a very profitable day.
Thank you very much, Harold. And yes, happy holidays, Merry Christmas, and we'll save Happy New Year to the next show. But we will talk to everyone. We'll be taping our show next Friday, the 27th, for the weekend. Connect with Harold at rarecoloreddiamonds.com. The telephone number 1-800-432-1022. Speak with Worldwide Precious Metals. Find out about the Volcker rule. What else is going on in the precious metals markets? Why now is the time to have hard assets in your portfolio like gold, silver, platinum, palladium. WWPMC.com. Telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.